Good evening, all. This is Sunday night. ShogunTrading.com. This is our free weekly newsletter. I'm going to keep this short and sweet today. S&P 500 it keeps going up a little bit at a time, not a whole lot, but a little bit at a time. Friday was up 1.78. Amazing thing about it is oil is hitting all-time highs, up to 128. Housing is not doing too well. Banking is not doing too well. We're still in a serious credit crunch, but the market is going up, and the market is going up because it has forward looking attitude. The market always looks 6 months to 9 months ahead. It's not reacting to the news of today, of the situation that's going on today. It's reacting to the news of today is how it's going to affect things 6 to 9 months down the road. Most people are investors, and when they invest, they want to buy a stock that's going to be good a year down the road, and that's why they're buying right now, because they think that we've seen the bottom in the oil in the housing market, and they think we've seen the bottom in the stock market as well. S&P 500, this was the bailout, the Bear Stearns bailout, and we're going up because the Fed is getting behind the market. The Fed is really helping the market. Stimulus checks are coming out. They're starting to get spent, and rates are being dropped, and looks like they're about done dropping rates. So that should give the market, both the real estate market and the stock market, the boost that it needs to go up. So all the bad news that you hear about on TV, think about, okay, what's going to happen 6 months down the road? Yeah, it's bad right now. Things are not easy right now. What's going to happen down the road? And that's what the market is thinking about. But it's definitely not exciting 6 months down the road. I'm not saying, this tremendous economic boom 6 to 9 months down the road, but I'm seeing, recovery. And this is basically a forward picture of what's going to happen 6 to 9 months down the road. You are seeing a slow, very choppy, very hard recovery coming up. Not a boom, but a slow recovery. And that's what the market is doing. Now, the problem with that is that if you're a long-term investor and you want to buy stocks for the long term, it's very difficult to make money in 2008. Because the market really has not gone very far. This is 2008. It's not exactly a screaming market. If you are looking for stocks that will give you 20% in a month, it's very difficult because the market itself is not really moving right now. It is putting up. It's drifting up. Now, as a trader or as an investor or a long-term trader, what you have to learn to do is to adjust yourself to market conditions. We all want the system. We all want the automatic system. We all want to sit on the beach somewhere with our laptop and buy and sell stocks based on our system that always works 100% right all the time, never a stop loss, always making money on our stops because it's so easy. The problem is that the market works on different speeds. It's a living, moving monster that has different speeds. And sometimes the speed... Try to imagine it as road conditions, for example. If this is the highway right now, we're chopping around. And when you're seeing the market chopping around, you have to reduce gears. That's probably the best analogy out there. Is you have to shift down. You have to, instead of using your highway gears, fifth gear, you have to go to second gear or even first gear at this point, because that's the only way that you're really going to make money on the market like that. I'll give you an example of some of our trades that we've done over the last few days. I'm not going to go further back than that. One of them is Trinity Industries. 34.17 all the way up to 38.73, and it's an immediate, short-term, very aggressive type of trading that we're holding for 3 or 4 or 5 days, and we're done. And then we move on to the next stock. It allows us to make those consistent short-term profits that accumulate. If you make 2% every day, 2%, 2%, 2%, 2%, 2%, without compounding, you're talking about 10% a week. And these, of course, contribute to it. Another one is ADCT that we bought at 14.45 and went all the way up to 15.86. Not a huge trade, not huge profits, but they work. They work all the time. They work sorry, not all the time. We do take our stops, but they work on a consistent basis where we're able to generate these short-term profits. They work extremely well for us. Another one on the short side, I'll show you CRBC. This is a bank. We shorted around the $8 level, and it went all the way down to 644. You know, quite a significant profit in a very short period of time that on a consistent basis works very well. We shorted 803, went all the way up to 640, down to 644, and I think it's going to keep going. One of those banks, it's part of that industry that's working very well for us. So anyway, this is a tougher time to trade because of the different speeds in the market. But you have to adjust to it. You have to shift gears down and work based on that. I see a lot of people are suffering right now trading. A lot of the long-term guys are suffering, but the short-term guys are doing extremely well right now because of the consistency in the trading. That's S&P 500. Forward looking, you can see 200-day moving average, which is the red line, and we're bumping against it right now. Are we going to break it? I think we're going to break it. I think we're going to continue this drift up. Why? Because items in motion tend to stay in motion, and I think we're going to stay in our motion up. Dow Jones Industrial Average, basically the same picture. Also, you see, we bounced off the 200-day moving average before, right here, and we are meeting it right now as well. 13,000, another big resistance. If we break this resistance, we break the 200-day moving average, it's going to be big news. You know, people are going to talk about it, and we're going to, excuse me, see the market propelling forward. One of the best stories is the NDX, the NASDAQ 100, which represents quite a few tech stocks. Broke the 2,000, keeps going up. Is it a screaming trend up? By all means, it's not a screaming trend up. It's good. It's very, very choppy with very sharp pullbacks. It's chutes and ladders, you know, which is a term we've been using lately with trading, because at any point in time you can hit a ladder or you can hit a chute. So, you know, not easy, but it's working. So pretty nice. Microsoft and Yahoo looks like they're going to try that deal again. We'll see what happens. We also have FOMC minutes coming out this week. We have oil numbers, crude inventories coming out. We have producer price index coming out. So quite a busy week. I checked on the futures. The futures are basically flat overnight. Not a whole lot going on. I expect some more of this short-term market to continue for the next week or two at least. I don't want to look too much further out than that. I am looking forward to the days where we can see the larger swings, where the market has some serious momentum, but I don't see them coming anytime soon because of the market, of the nature of the market. So keep looking for those short-term trades, 2, 3, 4 days, 2 to 5%. Keep accumulating those, and you'll be that much better off. Have a great week, and I'll talk to you next week, and take care.